All right. We have once again a small and intimate gathering of people who are in the know, who want to know more about one of my favourite commodities. Just while we're getting a couple of people settling in the back of the room there, come on in team, let's get this underway. I moonlight in Australia as a talkback radio announcer over the summer season every year, and this year I had the privilege of interviewing some of our resources ministers, and one of them, in fact, I had rather a heated discussion with about the applications of uranium in powering the future of Australia. And to say it got a little bit heated would perhaps be an understatement, because I certainly see the value of uranium in powering the future of Australia. So I suppose this next little part of our program today is focusing very heavily on uranium. We're going to start with a keynote, then we're going to a fireside chat, and then we've got some really interesting opportunities for you in this space, some companies who you may like to jump on board with to power your future investments. So I'd like, please, to introduce you to Mr. Guy Keller. So if you are a frequent attendee of this conference over the last few years, you will have had the pleasure of listening to Guy talk. He is the Portfolio Manager for the Tribeca Nuclear Energy Opportunities Strategy, and he's going to share some insights with us on navigating this complex yet very promising landscape. Would you please join me in welcoming him?
Thank you, and congratulations to you who have come to this session, because it stands out to me that you're all value investors and seeing a remarkable opportunity in a sector that's not making a lot of sense price-wise at the moment. So firstly, Singapore. Many of you may not know, but Singapore has actually had a number of years at looking at nuclear technology. I mean, I lived here for 6 years, and one of the big concerns about Singapore is water supply and electricity, because that's coming from other countries. In 2007, your then Prime Minister announced that Singapore would not ever consider nuclear power. Fast forward a year later in 2008, and Mr. Lee Kuan Yew at the Singapore Energy Conference stated that the Singapore government had actually explored building a conventional nuclear reactor on a little island called Pedra Branca, which is about 30 kilometres offshore apparently from Singapore, and there's currently just a lighthouse on it. They were looking to reclaim land and build a nuclear power plant there, but unfortunately the nature of close proximity here in this part of the world, the Malaysians said that's a little bit too close to us, so we're not going to do that. A few years later, there was a government-sponsored think tank with some universities where they explored building a nuclear power plant underground to deal with the issues of the lack of land here and the exclusion zones required. Fast forward to 2013, $63 million Singapore to employ a group of 100 nuclear experts in Singapore to explore things. 2020, the then Temasek CEO signalled her support for nuclear power, and then we fast forward to 2024 budget. Singapore government has invested $5 billion in the Future Energy Fund, where they state, and I quote, it was the Deputy Prime Minister Wong back then, said, we won't rule out nuclear power. 2025 budget, another $5 billion into that same fund, and now Prime Minister Wong saying, be it electricity imports, hydrogen or nuclear, we need to make major investments in new infrastructure. During that time, the Singapore government and the United States of America also signed an agreement called the 123 Agreement, which is on nuclear cooperation. So why am I starting with this? And the reason is simple. Part of the problem that's caused Singapore to not look at conventional nuclear is, as I said, that 10-mile exclusion zone around gigawatt-scale reactors. We've all heard about what we know as small modular reactors, advanced modular reactors, and those new acronyms, which are smaller versions of existing technology or slightly different versions. Now, the science has not changed. The science is known. We've known about these technologies since the 60s. We've tested them in Tennessee and in Idaho National Labs in South Africa and France, China are building them, but they've always kind of been a little bit of a pipe dream. So a country like Singapore, land constrained, has said, you know, it's nice to think about these technologies, but probably not something that is going to happen. Bring in the tech bros, global technology companies, and the move to data centre, the new baseload demand for electricity grids in the world. The United States grid in 2027 for the first time is going to run out of generation capacity, spare capacity in the electricity grid, because of the demands of these tech companies in data, and not just the race to AI and learning models and what have you, but the cloud services, co-locations, all of these things which require clean, reliable baseload electricity, of which nuclear is the only current technology that's commercially used in over 30 countries in the world to do that. They've solved one of the big problems for these other technologies is who's going to pay for it. You know, the old world of baseload demand being aluminium smelters and copper smelters are all doing deals to get cheaper electricity because their margins are not there. We've seen Microsoft pay Constellation and the grid twice the wholesale electricity price to have 3 Mile Island turned back on. Yes, 3 Mile Island, the site of the US's only nuclear disaster in the 70s, which shut down one of their reactors. Their other reactor continued to produce electricity right next door till 2019, where it closed down for economic reasons. So these tech companies are now saying to the electricity providers, we will pay you double what you're currently getting to give us these electrons. And that's where we're now seeing this new small modular, advanced modular reactor companies becoming much more viable. 2 years ago, I had maybe in the United States, maybe 3 designs starting their first reactors by 2030, and probably with government money. I've now got 6 to 8 designs building 4 to 6 to 8 to 12 of these things by 2030, because the tech companies have proven that they want to be the customer for these designs, and they're taking out the first of a kind build risk by saying, build me 4, build me 6, build me 12, which is going to help a country like Singapore, because then they can see this going on in the United States. And it's not just the United States, it's China. There's already small modular reactors connected to the grid, and a high temperature gas cooled reactor which has industrial applications being built and soon to be connected to prove that technology. But France, the UK, Korea, Canada, all of these countries are pushing forward with this. And so now we just need to solve the regulatory side of that equation. But from that perspective, there's 70 companies with 82 designs over a dozen countries. You don't have to be a betting man or woman to recognise that not all those 70 companies are going to be successful in bringing their technology to market. So we will see a handful of companies win out, and largely those that have got the tech company and government support. So it's going to be a really interesting space. Luckily, my fund, when we launched that 7 years ago, we didn't launch as a uranium miners fund, which would have made sense given that we run a global natural resources business and largely look at everything you can dig, pump or scrape from the surface of the planet. We named it Nuclear Energy Opportunities because when I was doing the work to say what's going to disrupt this thesis, the uranium trade has been sidelined, it's been not a good trade since Fukushima. It looks like it has some life. What's going to disrupt this? Is there technology that's going to change that? And that was when we identified that the small modular, advanced modular reactors were actually going to add to the uranium demand because it was, ability for corporations to build, not have to spend tens of billions of dollars to get electricity supply. So we invest in that. But then we also invest in the uranium side. And what you're going to hear from on the panel afterwards, we have a Canadian-focused panel this year, is that uranium supply is not easy to come by. And yes, we've seen the uranium price go from $20 to $81. Somebody said to me yesterday, the uranium price action has been terrible. I can't understand, what's going on in this trade. I said, I know it has been. The price has gone from $82 to $81. And that's the reality of this market. The spot price at $64 is irrelevant. It's a bunch of... I spent 20 years trading commodities and commodity derivatives, and can tell you my least favourite markets until I met uranium were tin and crude palm oil. And I thought I'd found quite possibly the worst commodity markets until I found the uranium spot market, where I can sell you, well, not you, but I can sell somebody that's got approvals to be in the uranium market, material that I may deliver to you in anywhere between now and 11 months' time, and I don't have to put up any cash, any collateral, nothing. And you just hope that maybe I'm going to get you the uranium. It's thinly capitalised, and it's not a good reflection of the market. However, that also breeds opportunity, because what we have found now is some of these uranium companies that are going to present to you today are trading at seriously ridiculous prices on the wrong side of the ledger. They've come off extraordinarily hard, and you know, we have seen it's still a very small investable universe. We don't have big global long-onlys in here always buying this sector, because it's just not big enough for them to do so. It's not advanced enough. Yet it's going to play an ever-increasing role into the future of green electrons, because if you want nuclear power, you need to have uranium. So we're at this opportunity here where there's a whole bunch of factors that have caused some very, very deep value, which is why, again, congratulations for being in here and not the gold room, because, you know, we need to roll out of gold into uranium. And you know, as I said, from our fund, we're global. We look at almost every project everywhere in the world. We've done a huge amount of work in last cycle. The great thing about uranium is on previous cycles, and also from government exploration in the Cold War era, we kind of already know where we should be able to find uranium. We're not going to get surprised by another Saudi Arabia or Kazakhstan of Saudi Arabia of oil, Kazakhstan of uranium, because we've kind of already looked in most parts of the world. So anybody that kind of sits there and says to you, oh, there's another Kazakhstan out there, short of the Athabasca Basin, which we're going to hear about shortly, we already know that's there. It doesn't mean that getting uranium out of the ground is easy, because we've had 15 years of underinvestment in this space. And just to touch on as well, when we're looking at the thematics, there has obviously been a lot of froth around in the sector because of this data centre trade. So all the tech bros came flying into some of these advanced nuclear, and they also came into uranium trades. We saw DeepSeek see a lot of them exit. That thesis has not gone away. Nor has it released any more capital to help the uranium supply. I don't need data centre demand in any of my uranium models to have a deficit out past 2030. I don't need China to build any more reactors from what they're currently building to not have a supply deficit out past 2030. I have a supply deficit on the needs of the 430 operating reactors in this world that have been consuming more uranium per year since 2008 than has been dug out of the ground. I then add the 65 reactors. Oh, building nuclear reactors is too hard. It takes too long. It's never going to happen. You know, the West can't do it. There are 65 reactors around the world being built, and only half of those are in China, which is saying other countries are doing their damnedest to try to build some more nuclear capacity. That's going to require by 2030 another 38 million pounds of uranium that adds to the supply deficit of primary mine supply deficit of 40 million pounds we currently have every single year. And again, China are announcing another 10 reactors per year. That's another 5 to 6 million pounds per year of uranium that we require just on those. And we've gone from $20 to $80 in the uranium price. We've only seen greenfield care and maintenance projects try to come back to the market. So last year, 9 of those came to market. Almost every single one of them have had problems ramping up, delays, cost overruns. That's the low-hanging fruit. That is the fruit that these global utilities had just assumed would come on at $60, and at $80 they're struggling. The utilities are not silly. They're not asleep at the wheel. They've been very distracted downstream by conversion and enrichment. They have not been focused on uranium because they reverse engineer. They say, well, what do we need to run our reactor? We'll then book the fuel fabrication, so the thing that makes the fuel rods. We'll book the enrichment, the conversion, and then we'll look for the uranium. The Russia problems and sanctions and export bans and self-sanctioning from utilities have distracted those fuel buyers from uranium. Constellation, who runs 21 gigawatts of capacity in the United States, the largest nuclear operator in the United States, has a fuel buying team of less than 5 people. Oh, ding. And they're focused on everything. They will be coming back to uranium because geopolitics and anybody that says Russia-Ukraine resolution is going to see a supply of a flood of uranium hit the market, they're ill-informed. It will not. It's going to be bullish for uranium because where your uranium is and where you're getting it from is going to become more important. Constellation has $1 billion to spend this year on nuclear fuel, and they quote, to rebuild their inventories with geopolitical uncertainty. The utilities are coming back upstream. There's going to be an enormous re-rate in this sector, which hopefully benefits all of these speakers that are about to get up because I own some of them. So we'll pause that there. I think I'm 15 seconds, and I might just invite the panellists up. As I said, we've got Corey Bielik, who's sitting right there, I can see. He's the CEO of Canalaska. Canalaska are a uranium explorer and development project in the Athabasca Basin, having some very good success at the drill bit at the moment. So we'll get Corey up here. And then we've got Stacey Golikin from NextGen Energy. NextGen's also up in the Athabasca Basin on the west side of the basin. They have the Rook 1 project, which is quite possibly the greatest ore body in the world, regardless of commodity. It truly is amazing. They have got to the point where a final investment decision is imminent. They've developed that project. They're also actively exploring the Athabasca Basin. So if we just welcome these two to the stage, and then we'll get on with some conversation. Right, Stacey. So we might just start with you. If you just give us a brief rundown of, for anybody that is not familiar with NextGen, just a brief rundown of where you're at, what you're doing, because you won't be presenting today, so Corey will have a chance to sing for his supper a bit later.
No problem. So NextGen, we are a Canadian uranium exploration and development company. Our flagship asset is the Arrow deposit, which is located in Saskatchewan, Canada. We are in the final stages of the permitting process, and once permitted, we'll be able to produce 30 million pounds of uranium on an annual basis for the first few years of its mine life. Now, that's equivalent to 25% of total global supply and 50% of total Western supply. So it will be very significant and impactful once we come online. We also have Indigenous support from all 4 Indigenous communities local to the project site. And yeah, final stages of permitting February next year.
So we're going to need 3 NextGens in the next 10 years. So you're one of how many of these big major projects out there?
The only one.
The only one. Right.
So it's an incredibly trepidatious situation given the supply-demand fundamentals. And
Corey, you've had some great success with the drill bit. How long ago did this journey start on your properties that you're now hitting some very good intercepts?
Yeah, this journey, the project 2004, so a little over 20 years, but really in the last 13 or 14 months, we've gone out and discovered ultra-high-grade uranium. Now, I use the word ultra because it truly is uranium grades and thicknesses, very akin to the nearby McArthur River mine, Cameco's giant operation, and Orano's as well, where they have 750 million pounds of uranium at grades in excess of 5%. So you're looking at a clear Tier 1 asset, one of the big 3, I believe, including NextGen, now 4th, which we aspire to be something similar to NextGen's story in the early stages, at least on that discovery. So we are an active project generator and explorer, a hybrid model that we deploy, and West McArthur is our flagship project that really now is truly shaping up to be something we believe very special and could be the next Tier 1 uranium discovery on the planet. And I think I'll be talking about that in about half an hour. So yeah, I look forward to that.
And so we're going to be able to, see you into production in 2030 when we have a big supply deficit hole, right?
Well, I don't think we want to produce uranium, Guy, but we definitely want to drive ourselves up that value curve as fast as we can with delineation of a resource that truly looks Tier 1, and then get it into the hands of the companies that might want to take it toward production. So that's our value proposition for our shareholders.
So here we are. NextGen was first drilled when?
When was the discovery made?
Yeah.
On Valentine's Day 2014.
Okay, so we've progressed 10 years or 11 years.
Correct.
And we're still 2 or 3 year mine build.
A 42-month construction timeline from when we receive federal approvals in hand.
Yep.
So the second part of our commission hearing date, the second and final part, is on February 9th next year. It'll take up to 60 days to receive the licence to construct and the permit to mine in hand, at which point that 42-month construction timeline will begin. So that'll take us into first production by 2030.
So we're a 16-year journey from discovery to production?
Exactly, and we've done it the most efficient and fastest in terms of permitting, and it's still taken that long. So even if there was another amazing greenfield discovery made tomorrow, you're still looking at 10, 15 years before it comes online, which again causes a very serious supply situation.
And Corey, you've put the 20 years of hard work into that project to now get to a point where at the right time of the cycle, there's you at least know where it is. It's now just finding out how much is there.
Absolutely correct. Yeah. So you're right, Stacey. It's going to be 15 years out from any discovery that's made today as a bare minimum, and I would suggest probably 2 decades. So even if our discovery were to go into the class of Tier 1, get into the hands for going to production, you're still looking at something that's pushing 2040 at the very earliest. So you need to take that into context as an investor and look at these growth projects like NextGen, where you're actually going to take it to production. That market is 2 decades out, and that's something that needs to be considered today, because you're going to forward sell those pounds, the next number of years to get to that point. So,
and let's just talk about Canada as a jurisdiction. I mean, it's quite possibly one of the most, well, it is the most prolific uranium basins in the world, alongside Kazakhstan. There's nothing that we know anywhere like it, but it's not that easy, right? I mean, you can kind of sit there and say, Canada, it should be easy. But let's just talk through some of those complexities. So NextGen have worked extraordinarily hard with the 4 nations, the indigenous nations there, but there's still a huge amount of politics that need to be navigated, even to the point you've got your relations with those nations. Can you just touch on that a little bit?
Yeah, certainly. I mean, we, and alongside Denison, we're the first uranium projects to have reached this major permitting milestone in over 20 years. So a lot of the staff that used to work for the Canadian Nuclear Safety Commission that run the permitting process, they're no longer working now. And as well as that, it's been a long time. So there's a lot of complexity that needs to be rectified, and a lot of what's the word I'm looking for? There's understaffing as well, and I think there's a little bit of hesitation in permitting these projects, but that being said, we're at the final stages, so.
And, I mean, Corey as well, I mean, you're exploring, you're not looking to, build mines and all the infrastructure that goes with it, but you still have to navigate the Indigenous and First Nation route, even at the exploration level.
Yeah, you absolutely do. In fact, we have 3 parties that we have to deal with. We've got 2 of those 3 in agreements with us at the exploration stage, with expectations that once you make a discovery, you then move to deeper conversations about how to move it forward. And we're working on the 3rd. So at the very early exploration stage now, the expectation is that the exploration agreements are in place, and you truly make commitments to each other to move projects forward. And that's just part of the now normal permitting and duty to consult process in Canada. And those companies that are first movers in that space, NextGen included, will benefit through those relationships that are so key now.
I also wanted to mention, yes, we do have all 4 Indigenous communities local to the project site supporting the project. They've been proactively advocating for our project to be permitted in the Saskatchewan province and in the federal government. They've actually been very vocal in requesting that our permitting dates be brought forward. That's the first time in history, in mining history, that Indigenous groups have actually asked for a mining project to be permitted earlier. Typically, they're asking for projects to be delayed or stopped. So it's a testament to all the work that we've been doing in the local communities.
And then, what is federal politics? How does that, or provincial politics first, and then at a federal election, there's a federal election coming up. Does that change things necessarily? If there is a change of government, there's a new Prime Minister there who was a Bank of England and a Bank of Canada governor, and also the chairman of Brookfield. Does that make things easier, or is there still political obstacles at both provincial and federal?
Do you want to tackle that first?
Yeah, so Mike Carney, he's currently the elected Prime Minister of Canada. He recently came out and actually said that the provincial permit should be enough. That's what we have at NextGen. We achieved that in November 2023. Both political parties up for Prime Minister are actually incredibly supportive of expediting mining projects and permitting approvals. But at this stage, whether or not we see anything come to fruition from what they've promised is another story. And also, if once actually in power, I still think at best they could bring forward NextGen's permitting dates forward by 1 or 2 months. So not really anything material to NextGen.
Yeah, I just build on that, in Canada, it's irrespective of which party at the federal level is in power, there's very little change or very little influence negative in the uranium space that occurs. And we've seen that historically. Provincially, incredible support. 80% of the Saskatchewan population roughly supports the nuclear business, mining uranium in the north, 80%. Where else in the world are you going to find that? I dare say it doesn't exist. I dare say it doesn't exist anywhere else on the planet, no matter what jurisdiction you're looking at outside of Canada or Saskatchewan. So it's an incredible place to go out and make a discovery that can actually change the future in the uranium space. And no matter which party is involved, you will have political support and public support for the space, which is, I think, very unique.
Let's just touch on investors. Your share price was held up quite well because you are delivering news with the drill bit. NextGen's been caught up in the broad sell-off for the sector and hasn't been immune from that. What are the conversations you're having with the investor group, and what are they saying? I mean, from my perspective, nobody wants to be anywhere near it. They're so focused on the spot price. They don't have any transparency on the term. They can sit here and listen to me talk about supply deficits all day long and say, well, the market's telling us different. You look at all the supply responses. I mean, whether you like it or not, the delay in the hearing from NextGen has brought analysts to push that profile out. We're seeing Paladin pulling production guidance. We're seeing a lot of these restarts. We're seeing the Kazakhs struggle and Cameco not moving fast to expand any of their capacity and doing studies and probably realising how much it's going to cost them to do that too. So there's so many bullish drivers from that supply just not being where anybody thought it would be. What are the conversations you're having with investors around that to get them convinced that this is the time that they need to be looking at this sector?
Yeah, ultimately, my conversations with investors, they understand the fundamentals and they understand that we're a great asset. That being said, what I'm gathering from all my conversations is that due to everything that's going on geopolitically, from a macro perspective, there's a lot of uncertainty and caution, and it's just causing a little bit more of a delay in their investment decisions. But ultimately, for NextGen, they understand the strength of our asset, they understand where we are, they understand the supply-demand fundamentals, but it's just a matter of timing.
Yeah, it's a matter of timing. I think for those that understand the market, Guy, that understand that spot price is not what you should be paying attention to. You should be paying attention to the term contracting, which has significantly changed in the last 12 to 18 months. And it's not being talked about enough. The ones that understand those fundamentals and what really is going to build the next generation of production out there, discoveries and expansions of existing production included, they're buying now. They're buying now because they understand that it's not a one-quarter thing. It's a 1 year, 5 year, 10, 20 year or more issue at play here, and this nuclear build-out is going to be multi-decade. And you have to start building the projects that are truly looking multi-decade. And those are rare. Those are rare. And the expansions that are set to occur out there, as you say, are challenged. They're challenged because, quite frankly, that $80 price is not high enough to make it economic. And that's, at some point, those utilities must come back to market and replenish their fuel supplies at literally any cost. And that's a key, at literally any cost. So at some point, that will come into play. And those in the know today and understand what we're talking about today will do very well, I believe. And that's a unique opportunity. And I think you mentioned that in your opening. It's a unique opportunity in the space for investors to really hit that home run.
And let's touch on that, because obviously, you know, there has been that disconnect because the size of the sector has, you know, as I said in my earlier remarks, you know, these big sort of, I mean, when people say I'm one of the smartest investors out there, it's just because there's not bigger investors out there. Sorry. But from that perspective of that disconnect where there's a lot of the equity investors are here for much shorter term, as we know, the market moves much more slowly on a longer term basis because the end client moves slowly, being the utilities. When is the penny going to drop then with the utilities? Because, you know, we've seen in last cycles, they're also slow to the party. You know, they sit there and sort of twiddle their thumbs to a point where one or two blink and then they all come rushing through. But why is that? I mean, they should be thinking long term, saying, you know, we need you guys because we're going to need it, and now we've got a tech company harassing us saying, I've got billions of dollars to spend, build more capacity. So, I mean, how does that solve to get them more aligned to the uranium supply?
I think I've equated it to in the past, a game of chicken. And you look at the utilities sitting across the table from the producers, today's producers at the very least, if not those that want to come into production. They're kind of waiting to see who blinks first. And when one blinks, especially on the utility side, and signs that first meaningful contract, not small long-term, you're talking meaningful contracting, that actually starts to replace, or I'm going to touch on this in a second, replace, but also refill their warehouses, which is another aspect we're not talking about a lot these days. We should be. When that happens, it is a crowd rush. And that's what happened in the last cycle. It was a little bit fictitious in its fundamentals. But reality is, when that en masse change occurs, it occurs very quick. And there's literally not a commodity on the planet, in my view, that reacts to that event like the uranium space. And it's very special. And it's going to happen. And I've equated it to a coiled spring winding tighter and tighter and tighter. And when it pops real fast. And there will be a rush. And now when we talk about inventory replacement, we're really talking about even contracting their consumption, which isn't matching it today, which means they're drawing down their warehousing inventories. If you go back to Fukushima times, there's indications out there that utilities in the US in particular had about 5 years of supply sitting in warehouse. That's down to 12 to 18 months. Yeah. If you want to replenish that to where they were comfortable 15 years ago, you're short an additional 1.4 billion pounds of uranium in the next 15 years. That's shocking.
Yep.
So discomfort will drive this very fast. And,
you know, there's a lot of sort of perspective about China and how aggressive they've been in their inventory build. And it's, you know, one of the few commodities that they've actually been able to get out ahead of themselves, and they've got lots of inventory. Yet we still see them everywhere trying to get into anything they can, still looking for projects. And all of that Kazakh supply is diverting into the east, into China. I mean, again, are the utilities really thinking that the Kazakhs and or Cameco are going to be able to rescue them on this supply response when, I mean, the Russians just signed off a whole bunch of their joint venture fields in Kazakhstan over to the Chinese? So again, you know, any peace in the Ukraine that where Trump and Putin do a deal, there's not surplus Russian material popping up everywhere because it's now going east as well. I mean, are they really, I mean, you guys are in active discussions. You've signed £5 million of contracts. How are they not worrying about this yet?
I mean, I can only speak to what we're experiencing at NextGen, and we're certainly starting to see the anxiety amongst the utilities increase. We signed those initial sales contracts with 5 major US utilities in December. We're hosting a site visit with 4 utilities this month. We are in active negotiations with utilities in North America, Western Europe, and Japan. But I do know that ultimately everyone else's experience perhaps is that utilities have delayed contracting. And I believe that's attributed to a lot of the implications with the US import tariffs and the Russian uranium ban waivers for that as well. I just think it's really quite a scary situation when you consider the US, they consume 49 million pounds of uranium in 2023. They produced 1 million pounds domestically. Where are they going to source all that uranium from? 27% comes from Canada, the remainder out of Russia and Kazakhstan, which is increasingly being diverted to China. Australia, we can't ramp up our production due to regulatory constraints. It's just, they're just delaying the inevitable, and we're going to see, as you said, a coil spring effect very soon.
Yeah, I mean, I guess that's a good point to touch on in Australia. I get that feedback that if there's a change in federal government and our nonsensical ban on nuclear power is reversed, then that's going to open up all of this uranium supply from Australia. And you're going to hear from a couple of presenters after this who've got projects in Australia, and whilst they're doing fantastic things, Australia is behind because Western Australia has been illegal on a party policy to mine. Queensland, it's a moratorium to not allow mining. South Australia has been open for business, but there's really, and that's the only supply coming. BHP, just by the way, utilities were thinking another 8 million pounds were coming from Olympic Dam expansion. BHP filed their regulatory papers for the smelter and refinery expansion to move into that ore body expansion, but there's not an increase in the uranium circuit because they can now mine that ore body and leave the uranium behind. So there's 8 million pounds there that utilities thought were coming from BHP that aren't coming. 8 million pounds out of a 200 million pound demand market, it's huge. But there's no question on that. That was just me talking.
There's no question on that. What's interesting is you couple that with, if you look at the Athabasca Basin, its production out of Cigar Lake and McArthur River. Cigar Lake's done in 2036.
Yep.
There's no more reserve. That's 11 years. We just talked about 15 to 20-year timelines for something to backfill that milling infrastructure.
Yeah.
It is McLean Lake. It doesn't exist today. So that mill will shut down in the absence of some drastic change occurring, which I highly doubt, because there's no big Tier 1 discovery yet announced in that part of the Athabasca Basin. Then you turn over to McArthur River, and if Cameco and Orano truly go to 25 million pounds per year production, you're looking at 14 to 15 years of mine life left. No more reserve base.
Yep.
When I was there, they spent 5 years looking.
Yep.
So I kind of understand that. So you've got a problem where McArthur River needs to know today, or the Key Lake Mill needs to know today, what is the next source of feed for the Key Lake Mill, which produces 20 million pounds a year at present. Can go to 25. It doesn't exist.
Yeah.
There is no Tier 1 discovery in the Eastern Athabasca Basin to fill either of those operations known today, not including NextGen's, which is on the west, which will be built. But that's the problem that is facing the world right now, literally 11 to 15 years out in time. It's shocking, coupling it with what you just mentioned about
and the Kazakh supply situation as well. I mean, everyone says, it's just a short-term bottleneck because of acid. Like Cigar Lake, when Cigar Lake are going to move, there's going to be a higher arsenic content out of that ore body because guess what? They mine the best part of the ore body to start with.
That's right.
So that mill's got to work harder to process that, and more reagent costs, more processing costs. Same with the Kazakhs. Their costs are going up, not just because of acid, but because of wellfield development, because again, they started in the most prolific areas. They need more acid to keep their recoveries up. And the only expansion is in joint venture fields with Russia and China. So, we sit there and look at the problems with Inkai, the Cameco joint venture, because any acid coming in from Russia, the Russians are saying, it's not going to that field, it's Budanovskoye, it's our fields. So again, that geopolitical influence is not the only thing going on because they've also had a huge delay in wellfield development. And so that's, everyone sort of says, it's they've got all these big ISR fields. They have to go and, as we know, and anybody that's followed anything of those ISR, there's a ramp-up period. So, yeah, I mean, it's going to be a really interesting, sit back with the popcorn to watch this play out. And I think, as we've seen in the past, there is a lot of volatility in this investment thesis. There's no doubt about it. But you don't get 400% to 500% return over 7 years, so even through the bad points, without volatility. The trick is, at points in time like this, it's not just a blanket buy everything, because as we're finding, just because you're sitting on a last cycle deposit doesn't mean you've not got the expertise, the community relations or the management expertise to move those forward. And also, there's a limited pool of capital. So if everybody wanted to go and raise money to drill, there's not going to be the capital to allow that to happen. So it's an incredible opportunity here at the moment to really pick out these winners and capitalise, because it's going to be a really small holder to get through, both on the investment perspective and trying to get projects moving forward in all jurisdictions. We're coming down to the last 34 seconds, so I might get a nasty bell in a second. But maybe just some quick closing remarks. You're about to talk, so maybe just a quick closing remark, and then Stacey can potentially close the panel for us.
Well, thanks, guys. It's been a pleasure to be up with you today, and Stacey as well, talking about the uranium story. Not just Canalaska, not just NextGen, but the story on a global scale. And it's something I would encourage investors to really dig into, because when this changes, there's nothing like it, in my view, where that revaluation can occur so quickly, whether it's discovery, production, or just the market in general. So I will talk about Canalaska in a few moments, so I'll maybe just leave it at that. The uranium space is exciting, and my 31 years has taught me that very well. Hang on for the ride, because it's going to be crazy. It's going to be fun.
It hasn't taught you fashion sense, but maybe stuff about uranium.
Hey.
Yeah, thanks everyone for your time. Thanks, Guy and Corey. Really appreciate being up here. As a reminder, NextGen, final stages of federal permitting for February next year, so first production 2030. If anyone has any questions, please come grab me. Thank you so much for your time. Just remember, long-term fundamentals remain the exact same.
Yep, absolutely. Thank you, everybody, for your time. And as I said, now we'll start the uranium presentations.
Thank you, panel. Guy, Corey and Stacey, thanks very much for sharing those insights. Guys, I know that's going to be one of our much-watched fireside chats. Guy, always interesting to speak to you or listen to you, sir. All right, Corey, don't you leave the stage. Come back here. I don't think there's a lot that I can say to introduce you, but you certainly set the scene for us, given us a lot to think of, so we know where you're located. Now we need you to give us some specifics and to see if we want to hang on for that exciting ride. Will you please make Corey welcome, everyone?
All right. Well, thank you very much. It's a real pleasure to be here today to talk about Canalaska uranium. And I'm not going to stand behind the podium. I like to actually move around a little bit more dynamic. This is a very dynamic story. This is going to change very quickly in the next number of months, if not in the next 12 months. So you need to be paying attention, I believe, to the Canalaska story. And I'm going to share with you today why that is. We are working on our new Pike Zone discovery in 2025. It is truly the world's newest ultra-high-grade uranium discovery out there on a global scale. This is something very special, akin to what you might find at the McArthur River, nearby McArthur River giant mine, uranium mine owned by Cameco and Orano. So let's work through this story. We had an incredible 2024. We continued to intercept and expand the Pike Zone discovery, which we announced for the first time February 28th of last year. First ultra-high grades last year. We've continued to drill those through 2024, expanded the target, completely open in all directions, really working toward what we hope is our first resource number at some point in the next number of months to certainly first half of next year. Extensions, pearls on a string. We'll hear that story a lot today. Pearls on a string. That's how these deposits form. Very small, very high-grade pearls, which make these deposits special. Now, our West McArthur JV is a joint venture with Cameco. We own 86% of that project. Cameco owns residual interest. And our portfolio is over 500,000 hectares large, mostly in the Eastern Athabasca Basin. We are about the fourth largest landholder in the space. An incredible, incredible portfolio around all that critical infrastructure. So we believe we have an advantage as a company amongst our peers. We have the right strategy with the right team on the right assets. So strategy tier one in the Eastern Athabasca Basin, We're going out there and making that type of discovery. Our team, built off Cameco and Orano trained geoscientists, these individuals have been part of major discoveries in the Athabasca space, let alone involved on the global scale, going out there and making new discoveries, hopefully in the Canalaska portfolio as well. And speaking of that portfolio, again, right portfolio, right space, in the east with a great partnership in Cameco, or one of our other projects has a partnership with Denison, and we are a well-structured vehicle. So here's the vehicle. We have about 185 million shares outstanding for a company that's been in the space for over 20 years, very well structured, market cap hovering around 140 to 150 million these days, really on the back of some incredible results in the last 12 months. And you can see our chart here over the last 2 years on the right. We are financed. We have over $23 million in the bank today, 3 drills turning, working on this incredible discovery asset. We have seen our shareholder base switch from retail over to institutional. This is from September. Our institutional holdings, we believe, are around 40% now. Some big players are coming into this space, as we just heard about the next-gen story, thinking that, we could be the next-gen. They're getting involved now. They've been working hard to get a position in the last 12 months and really following this story very closely. Myself, a geoscientist, been in the space 31 years, 25 years with Cameco, the last 6 years with Canalaska, leading the charge here on discovery. My VP of Exploration, Nathan Bridge, out of Cameco, very talented young geoscientist, over 10 years with Cameco, part of major discoveries for that company in the Athabasca space, a great individual, and together we've been rebuilding the team in Saskatoon. At the board level, led by Karen Lloyd, former director of Cameco marketing, she used to move all the pounds around the world for Cameco into those long-term contracts. She understands utilities, she understands the market, very well versed in the industry. Shane Shercliffe, another former Cameco employee, Cameco corporate development. I worked with Shane for a number of years on a global scale, looking for the next tier 1 production for Cameco. A great friend of mine, a great asset to have at the board level. Jeff Gay, we spoke about Indigenous agreements and Indigenous support. Jeff Kay runs the Athabasca group of companies owned by the Indigenous communities in which we operate. So he brings a great connection to the local chiefs and councils, making our efforts potentially that much better with the Indigenous groups. Now, we heard a little bit today about production challenges, yes, because Adam Prom, that's going to get solved, that's fine, but these are the blips that cause market turmoil. Microsoft, going and saddling up with Constellation. Why? They need the clean baseload energy, that clean energy that can support their data ambitions. That's all in the face of some challenges with production, which we talked about a few moments ago. Recent news, big tech, decades-long nuclear build-out underway. You've got Meta, Amazon, Google, all teaming up together to produce up to 1 million megawatts. These tech companies, these big tech companies, are not waiting for the governments to solve the problem. They need clean energy. They need it today. They're working to build this out. $4 trillion to $5 trillion market cap among these companies. They've got the wherewithal to go out and do it, and they're actually doing it. Small modular reactors. It's not just in places like China, maybe in Europe. It's happening in Canada. Canada, in Ontario. 300 megawatts of small modular reactor technology going in at the Darlington facility, all producing clean energy by the end of this decade. 6 years from decision to first power using SMRs. Incredible. Wait till this happens on a global scale. Wait till this starts to happen in the US market, the biggest nuclear fleet on the planet, about to get larger, we believe. We need more uranium. That's where Canalaska starts to come in. So the graph on the left, this is the first time in 70 years of uranium production where primary and secondary supply cannot meet demand, or is not meeting demand. That's never occurred before. Rock solid fundamentals. Rock solid. We need more production. On the right, there's a conservative forecast out to 2040. Okay, that's short 1.5 billion pounds of uranium. That red wedge, we don't know how large it is. That's SMRs, that's restarts, that's extensions. That's all not factored into this green demand line. There's a lot more uranium that needs to go to be found, produced, and put into the contracts that are coming down the pipe. Now, spot price. I don't care about spot price, other than it's way too low. Okay, that blue box is the step change zone for tier 2 assets on a global scale. It's somewhere north of $100 a pound in order to build the next real profitable production anywhere on the planet. This is what we care about, long-term contracting. It's moved from $60 to $80 a pound in the last 12 to 15 months. Okay, that's a significant change. This is a signpost that hasn't existed post-Fukushima. It is back, it is stabilized, but it will continue to go higher. Why? Because you need to be north of $100 a pound to even consider building new operations that make money. Trump economics. We're all aware of that. More coming in a few hours' time. We'll see where it goes. It's impacting the markets. And what is it really doing? It's hurting companies like Canalaska, among our peers, even the big players like Cameco. Uncertainty in the market is making it hard to actually finance these projects. We have $23 million in the bank. We're well financed. We do not have to go to market. We can ride this out. You can see the impact of what happened right after we announced the best hole we've ever drilled at Pike Zone. Tariffs came out the same day. Bad luck, drove us down for a month. There's the buying opportunity in Canalaska's story. Look at us against our peers. Definitely outperforming in the last 2 years against our peers. Everyone's down, we're up. Why? On the back of this discovery. Against the big players like Cameco, among many others, NextGen included, we are performing very well in this turbulent market. Why? We're financed, we got the right asset on the go, we got 3 drills turning. Incredible news flow coming from Canalaska. So let's look at this. We're an active explorer and project generator, again in the eastern Athabasca Basin. We generate projects and do deals. Why? To minimize our shareholder dilution, keep ourselves cashed up, really stay focused on the projects where we see value like West McArthur. So we are focused in the east, again, all that critical infrastructure. This is our drilling plan for the year. West McArthur is dominant. Okay, we're looking at putting 40 to 50 new impacts into the target this year alone. Incredible amount of work happening on our West McArthur asset. Cree East is a drilling program we're currently working on, sole funded by Nexus Uranium. Again, news flow coming into our portfolio. Our portfolio expands all the target models from NextGen's Arrow on the left in this image right through to deeper sandstone like McArthur River. We can use that to our advantage if we understand how to look for these assets. Okay? They come with large alteration systems looking for a very small target, which can be literally 100 meters in size. So let's look at this. Where is the Pike Zone? It's 20 kilometers west of the McArthur River mine, shown here on the right. That is the world's largest, richest uranium mine on the planet. 20 kilometers away, our partners Cameco on this project, they own the McArthur River mine. There's the haul road down to the Key Lake Mill on the right. We drive here year-round to work. We're not seasonal. We can work here year-round. It's part of the C10 corridor. That's the fault zones and things we chase geologically. It's already host to Cameco and Orano's 70 million pound, 8% average grade Fox Lake discovery. Not big enough. Tier 2 is not Tier 1. We're looking for Tier 1. That's how close we are to the critical infrastructure. So what do we do in 2024? Well, here it is. These are some of the results. This is McArthur River-like, period. You won't see this anywhere else in the world. These grades, these thicknesses, this is a McArthur River-looking clone. Any of the zones of McArthur River, this is what they look like. We're working at an incredible scale, which totally makes sense for making this into a Tier 1 asset at these grades and thicknesses. What are we focused on in 2025? Well, filling the gaps. Filling the gap between what is 2 ultra-high-grade uranium pods right now, shown in those clusters of red stars. We got 3 drills turning, 1 in the middle, 1 on each end. Expanding this, making it bigger. Working toward our first resource at some point, hopefully, in the first half of 2026. This is the first hole we announced from the winter, February 5th. The best hole we announced to date on this project, showing, again, step outs to the right or to the east, and it's going to continue through the winter. So, we talk a lot about McArthur River, pearls on a string. Here's McArthur River, 7 pearls along a string, along a fault zone. 750 million pounds of uranium at McArthur River. One of those zones, Zone 2, is host to half that reserve, 350 million pounds of uranium in one of those zones. What's the size of that? 80 meters, by 20 to 25 meters, by up to 60 to 70 meters into the basement. It fits in the space of a North American football field. 350 million pounds of uranium at grades not too dissimilar from what we're drilling at Pike Zone, and widths not too dissimilar from what we're drilling at Pike Zone. So let's put this into perspective against our drilling. Here it is. That's a simple red box, just to give you a scale. 80-meter long box, 20 to 25 meters wide, 65 meters into the basement against one of our drill sections. There we are. We're filling that red box. Again, that's representative of Zone 2 in size, 350 million pounds of uranium. We've got a second one on the go, a second pearl. Perhaps they're connected. We don't know. That's part of the work from the winter. News flow to come in the next few weeks on what we've been up to for the winter. You can see that it is looking special. We can make this a Tier 1 asset at these grades and thicknesses without moving off of this page. And all of our drilling suggests we got a third, and we're currently drilling this one right now. So we may have another pearl starting just to the left or to the west. Again, incredible, incredible asset forming up here. Our first hole, here it is for reference, filling that red box further. Just to put it in the context for you, we're working on filling that in the next 2 to 3 months as we work through the rest of our program into September. How do we do this? We're working at depths of McArthur River, 700 meters, down to the unconformity. It's not for the faint of heart, especially in the junior space, because we're Cameco and Orano trained. They routinely explore at 1,000 meters depth. 1,000 meters. This is how they do it. The instrument on the right there, that is mud motor technology out of the oil patch. We basically turn 800-meter holes into 300-meter holes. This collar that you're looking at hasn't moved in almost 14 months. That drill is still sitting on the same drill pad. Here it is. Those are the 3 drills at play. The one in the foreground here hasn't moved in over a year. The one in the background hasn't moved in about 8 months. The one just to the right just came in, and it probably won't move for 6 or 8 months. This is how we're delineating it. What it means is that we're able to save our shareholders last year $3 million. Importantly, we took $3 million of our spend, put it back into the ground in terms of more discovery opportunity for our shareholders and delineation of this asset. It's all done in-house by our geoscientists. We don't bring in outside contractors, keeps the cost down. We are among the cheapest explorers on a per meter basis in the Athabasca Basin out of any of our peers, let alone the big companies. An incredible, incredible team at work here on this Pike Zone discovery. Now, we talked a little bit about production challenges. This is from Cameco's website. Okay, this is, you can go find this online. This is their reserve base. Let's look at McArthur River, which is right next door to Pike Zone. In the next 15 years, Cameco and Orano need to know the next source of feed for the Key Lake mill. 15 years. Sounds like a long time. We heard today, if we found it today, it's already too late. Okay, that is it. That is all they have for reserve at McArthur River. Thank you. The time is now for this discovery. There's a strategic opportunity for Canalaskans shareholders. There's an asset here that if we're right, and this is a tier 1 asset, if we can prove that up, it will garner an incredible value right next door to this critical infrastructure with a critical need in a time where the world has a critical need for new production to come online. We do lots of deals, project generation. Last couple of years, we've done $44 million worth of deals. Again, that's news flow for our shareholders. Importantly, we don't have to lose focus and dilute our shareholders to continue to work our West McArthur asset, our Pike Zone discovery. It's just a part of our business. So let's look at the forward value proposition. This is a next-gen story. I lived through them going from 50 million market cap to 1 billion in 12 months. Why? They showed the market they had 100 million pounds of uranium in the ground, at least optically, if not in reality, with their first resource. This is the re-rate that occurs. And you can go back through 20 years of history in the Eastern Athabasca Basin. It's valued at $8 US a pound in the ground on any M&A transaction or discovery transaction that occurs. You can go check that. $8 US a pound in the ground. If we can put 100 million pounds of resource in our maiden resource at our Pike Zone, we should be $1 billion valuation on that metric. And that's tested and true for the last 20 years. We are looking to move up this value chain very quickly with continued drilling. Again, 40 to 50 drill holes into this asset, working toward that first resource. That should get us the re-rate. That is the start of the rapid valuation trajectory for our shareholders and Canalaska. So we truly tick all the boxes, the most important of which is this is a brand new discovery, ultra high grade uranium. There's 70% uranium in my hand from one of these drill holes. Incredible stuff, heavier than lead, an incredible story that's unfolding. I would welcome you to follow us through this discovery journey. Thank you.
You take that one back and hand the power into the next one. Well done. That was a big session for you, Corey. Thank you very, very much. An interesting conversation. We're going to move from the Northern Hemisphere now to uranium opportunities in the Southern Hemisphere. And we're going to start off in Australia, obviously where I come from. We've got the Frohman and Bayment Basin. Now, they host 2 of the 3 producing uranium mines, and they are within South Australia. And exploring in this fertile region, our next company, Orpheus Uranium, a junior explorer who could give you exposure to what we like to call the big boys territory. This is Clinton Dubineski. He is their CEO. Please make him welcome.
Thank you, and thanks Rebecca for having us here, and Guy for being a big advocate for the industry, the uranium industry. So uranium's at $65 a pound spot price at the moment. When we look back 12 months ago, that was $100 a pound. Look back 2 years ago, it was at around $40 a pound, and take another step back to about 4 years ago, and we're seeing it around the $25 a pound. So what does that mean for you as the investor and for us as a junior explorer? I'll hope to look to answer that during this presentation. As mentioned, my name's Clint Dubineski, CEO of Orpheus Uranium. I came on about 10 months ago, took up the opportunity about 12 months ago when the uranium price was at over $100 a pound. I'd been working in the uranium industry for close to 20 years. I started off with Areva, which is now Orano in South Australia and Australia, on some of the projects that Orpheus now holds. Had the opportunity to work at Uranium One with a Honeymoon deposit that's just recently come back online through Boss Resources, including the surrounding areas. And then spent the last 10 years at Heathgate Resources, which is Australia's longest in-situ recovery uranium owner and operator. So with that, I had the opportunity to work on everything from greenfields exploration through to near mine or resource development and into production. And when this opportunity came up, I guess like an investor, I had to make the decision on, do I invest my career in this next step with Orpheus Uranium? Obviously the disclaimer. With that, when I had to make that decision, I had to look at the tenure that Orpheus held. And when you take that step back, they've developed a really good portfolio of tenements that are in Tier 1 jurisdictions within Australia that allow uranium mining and exploration. And that's really important when we start to talk about value per pound. We see it in South Australia. There's a higher value per pound than there is in other states, given that it does allow mining, has evidence of mining. With that, I also got the opportunity to develop this portfolio, and we're still working on that. But it was a really big step change for me, coming out, working within bigger businesses, and looking at tenure, but quite constrained to the production size of businesses. I said, is $65 a pound a good price? When we have a look back through my career, most of it's probably been sub $30 a pound, even to the extent of being around about $16 a pound near on 10 years ago. So again, a lot of that had constricted the industry to focus on production. So we've got this opportunity now to revisit some of the areas that I've had a look at over my career and start to build that project pipeline that we'll have a look at. Within that, the tenure that we hold at the moment is 100% owned and operated. That's really important in terms of your return on investment and our ability to be able to be strategic with the tenure that we have. And fundamentally, we've got a bimodal strategy that we're looking at again in our market capitalisation. We're looking at discovery as a primary focus, but also what we're seeing now, and I addressed what does it mean for the investor, are the opportunities for us to bring on tenements and bring on projects that haven't otherwise had exposure to an increasing uranium market. And I think that's the same to be said with the investors as well. This decline in the price over the last 12 months really provides that opportunity. We've heard the panel before us talk about it. There's a lot of undervalued projects and stocks out there. And with Orpheus Uranium being based in South Australia, having projects that haven't had the exposure to the market in an uplift is something very unique and an opportunity for people in the room to think about. So I'm a geologist, got to talk about discoveries and the likes and geology, but when we start to take the step back with uranium, we've also got to recognise where it sits within the process. You heard the conversations earlier. It's uranium exploration, uranium mining, uranium conversion and enrichment, through to fuel rod creation and into the power plants. So different than a lot of the other commodities that you see, uranium's an enabler. What is also different about other commodities, it's very cyclic in nature. So we see in the 1950s, post World War II, for nuclear weaponry in particular, 1970s when nuclear fuel started out, we had a renaissance in uranium in the 2000s, and we're sitting here again today. And I think what we've got to take away is that with that cyclic nature, two things. We explore and we get a lot of data, but it is very periodic compared to a lot of other commodities. Secondly, when we explore, we discover. So again, what Orpheus presents is a unique opportunity for a uranium-focused junior exploration company with a small market capitalisation and potential for growth. Within the business, we've got a selection of projects. As I said, we're looking at a project pipeline, everything from what we consider greenfields exploration, which hasn't had much exposure to exploration, to advanced exploration. So these areas that have had that periodic exploration and have had predominantly majors or bigger companies put a lot of meters in the ground, but pull out for factors that are not because there's no mineralisation there. Pull out for factors because there's a global financial crisis in 2008 or Fukushima in 2011. So for us, what are we looking at doing? We're looking at advancing our projects through that pipeline, bringing in the business development opportunities, working towards getting on the ground drilling, developing exploration targets with an ideal outcome of having a JORC resource. As we look at it, it's ongoing. We're rationalising the project as we bring opportunities in. On this, you'll note a few projects have a little hat on them. They're our primary projects that I'll have a chat about in a bit more detail. So where do we sit? We saw the Lassonde curve just presented a second ago, and I think as an investor, this is what we really need to consider, is that Orpheus is developing geologically relevant tenure that has the opportunity for discovery, or well positioned for discovery. We're at that low point, compounded by the pullback in uranium. We really see that opportunity as an investor for the drill bit to get onto the ground, have a discovery, ride the wave up. Again, we're looking at the project development and can we get that step change as what we're seeing the spot price or the perceived spot price go up. We've heard that the term pricing hasn't moved much, but a lot of the market reacts to the spot price. So hopefully we can see that head back up. So without, or to contextualise it, we had our Northern Territory projects in Australia, which is in the north of Australia, and our South Australian projects. With our South Australian projects, the sedimentary style uranium, where the uranium actually occurs within permeable sandstones. These are actually, or they have a source, transport and trap mechanism in terms of the geological, or in geological terminology. And an example of this is South Australia's Frome embayment. And we'll have a bit of a look on a map in a couple of slides, but this is the two operating mines two of the three operating mines in Australia, the third being BHP and Olympic Dam, so it doesn't really count. With this, it's recovered through in situ recovery, essentially water wells. You can see the image up on the slide there, low surface impact and cheap to be able to get out on the ground, comparable. The grades here are a lot less, footprint's bigger, but your resources can build up. And as a junior company, you can start to have that growth as you start to drill these resources out. The other type of deposit is the unconformity style, which Athabasca, and has been spoken about quite a lot. This is what we're targeting with our Northern Territory tenements. So that's high grade, high tonnage resources. For us, South Australia is probably the premier area. We're based in Adelaide, so got ease of access. Again, we have a look at the tenure in Australia. The Frome embayment and surrounding areas are tier 1 jurisdictions that have evidence of uranium mineralisation and production. We've seen the companies such as Boss enter back into Honeymoon, a deposit that was put in care and maintenance after Fukushima, and really take that and elevate that profile and the associated business as well. When we look at our tenure within this particular area, there's probably 4 target areas, excluding Alligator Energy Samphire deposit out on the Eyre Peninsula. In South Australia, there's these 4 target areas. 1, Heathgate Resources, held by Heathgate, hard to get into, but does have large-scale deposits. 2 is Boss Energy's Honeymoon and the associated Paleo Channel. You'll see there that Orpheus has a small ground holding around there. Number 3 in South Australia would be the Frome, would be our Frome project. And that's next to or adjacent to Boss's Gould's Dam project, a 25 million pound deposit that sits within a channel system or geological setting that has a synergy with the tenure that we hold. And we can have a look at a bit more detail with that in the next slides. Lastly, you've got probably number 4, Radium Hill South. Why this particular basin doesn't have a deposit in it, it has got all the evidence for deposits. And you can see that within the tenure profile there, again, Boss Energy, producer, looking at exploration, Orpheus Uranium has what we would consider more favourable tenure to uranium mineralisation, given it's closer to the source. The other consideration that we've got to take is how proximal we are to existing or developing operations. When we start to think about a discovery through to production, we've heard that it takes time. They've got to understand the different parameters regulatory-wise. For us, working in areas that are being developed, that have had regulatory approval, that the regulators are familiar with, can convert discovery into production in a quicker time frame than otherwise. So again, we're looking at project generation within this area, but a really good part of the world to be in. With that, probably our marquee project is the Frome project. I was fortunate enough to work on this as a graduate when I said I was working with Areva. It's got all the ingredients that we want: source, transport, trap. And I'll emphasise that a lot. Source, transport, trap is what you need in a geological relevant setting for uranium mineralisation. Within this particular project area, it contains known mineralisation. And the mineral system has fundamentally been discovered. So we've got prospectivity over the entire tenement package. With that, we're actively exploring. We're looking through tenement reviews, looking at the data, and trying to get the location or the best location for us to complete our drilling activities. So we'll have a look at the originate project area, which is a small section of this particular tenement package. The originate prospect, it's about 12 kilometres by 7 kilometres. We've actually got evidence of uranium mineralisation within this particular deposit or this particular prospect, up to 1,500 ppm a year 308. Importantly, we've got the development of redox. When we start to look at these deposits, you want to see a simple map like is up there: orange, yellow, grey. We're looking for what's oxidised to reduced. Uranium precipitates on that boundary, and it can precipitate multiple times within your particular aquifers, and we see that section there. Within this, the area had been drilled by Areva back in 2008, 80,000 metres. From my experience working at known deposits, the ability for us to be able to define potential mineralisations between those drill holes is evident. We can actually leverage off those drill holes as a junior explorer to put what would have been 10, 20, $30 million into the ground to actually leverage us and put us in the right position early on rather than having to go out and do reconnaissance drilling. Radium Hill, I touched on this as well, the same situation. We've been able to grab 40,000 metres of historic drilling based upon work that had ceased in 2011 after Fukushima. And we know here we've got the source, transport, trap, with 5 particular prospect areas that we can now come back into and undertake refined drilling activities. So again, rather than having to do regional exploration and progressively step back in, as we get on the ground, it's high impact exploration. And that's evident again, that northeast, southwest trending redox front that's been interpreted from historical data. Northern Territory, I'll just touch on this quickly. We're looking at unconformity up there. The Mount Douglas project, or Pine Creek Origin, is host to Australia's unconformity style uranium deposits, which I'm sure others will be talking about a little bit later. For us, the key project out here is Mount Douglas. We're looking at an area that's got sufficient radiometric anomalies. There's a mapped unconformity out here, which is important when you're looking for these types of deposits, undertaking reconnaissance, grab samples, and geophysics. So putting ourselves in a position to have or be on the ground trenching and potentially drilling, depending on the results or the preliminary results. This is a small little prospect area that we've got. Grab samples up to 750 ppm. We're working with the NTGS. We've got approval from the NTGS, the Northern Territory Geological Survey, for an MMP that allows advanced stage exploration activities out here. So we're working through that process to see if we have the potential for discovery. As a business and for you as investors, we think we're undervalued at the moment. We're 2.7 cents, market capitalisation of 6.4 million. But what does that mean? It means the potential for growth. We really see that we've got a good cash balance that allows us to explore, as well as some liquid assets that we can utilise and leverage off as well. Fundamentally, the share price is quite reflective, as a lot of uranium companies are, based upon that uranium pullback over the last 12 months. Again, for us, uranium, we see right space, right time. We've got a technical team, which is important when you come back and are looking for discoveries. The tenure is situated within Tier 1 world-class prospects. The prospectivity within those, defined prospectivity is there, and we're developing that project pipeline to give us multiple opportunities. Thanks.
Take that with you. Well done. All right. We've heard from a junior explorer focused in Australia. Now let's turn to a company with its foot firmly on the gas over in the US, right where the demand for secure domestic uranium supply is red hot, as we have heard. Global Uranium and Enrichment is locking in ground in Wyoming's Powder River Basin, tapping into one of the most productive uranium regions in the world. So here to unpack what it means for us as investors, would you please make welcome Andrew Ferrier, the Managing Director of Global Uranium and Enrichment. Welcome, Andrew.
Thank you very much. Yeah, and thank you for the opportunity to speak today. Obviously, I only got a short period of time to talk, so I'm going to try and give you a snapshot of all the assets which exist in global uranium today. We've recently made a big acquisition of a uranium project called the Pine Ridge Project in the Powder River Basin. We have existing other assets in Colorado and Utah. We have a pretty significant land position in the Athabasca Basin. And we also have an investment in an uranium enrichment technology, which I'm going to speak about separately at 3 p.m. today. So there's a lot in this company. All this sits in a market cap of Aussie $20 million today. It makes little to no sense. There's obviously a lot of uncertainty in the market, but we continue to push forward with our assets. So we just recently announced the acquisition of the Pine Ridge project. It's a large asset in the Powder River Basin. We put an exploration target on it of 24 to 52 million pounds of uranium, which makes it a very substantial position. It's very close to an existing uranium mill, which is held by Cameco. And we worked on this transaction for a period of 9 months. We acquired it it was held privately for the last 12 years. They spent a substantial amount of money on the asset, and I'll give you a sense of why we're so excited about this asset moving forward. To do the deal, we entered into a joint venture with a company called Snow Lake, which is a NASDAQ-listed company. They'll become our joint venture partner on the project. We're very excited to bring them on board, and through that process, they're also coming on to be our largest shareholder with a 20% position. So it's been a very fast-paced environment for us over the last couple of months, and I'm pretty excited with where we've ended up. So I'll cut straight to the picture. Why do we want to be in the Powder River Basin? There's lots of reasons. The team's got a huge amount of experience, one in the Powder River Basin. We've been personally responsible for permitting another uranium mine called the Reno Creek asset. We got a permit for that back in 2017, sold in 2018. So we're part of, we're one of very few people to actually permit an ISR project in the US, let alone in Wyoming, let alone in the Powder River Basin. So we know the project extremely well. This Pine Ridge project is 30 k's from Reno Creek. So we know this landscape extremely well. Obviously, when you look at valuations, and this is, Corey touched on this brilliantly when he was talking about his discovery, why are we so interested in it? Well, this project is well advanced. It's got 1,200 holes on it. When we continue to develop this asset, we know this project is going to trade at a premium. The comps are moving around a little bit in this uncertainty, but it's still clear today that good development projects in the Powder River Basin get valued at $4 to $6 per pound. We're picking this project up for $1 a pound. As we continue to advance it, we can see a very significant re-rate for ourselves and Snow Lake in what we're doing. This is the time to be acquiring assets like this. The uncertainty, while annoying, we continue to just push forward. So why the Powder River Basin? Well, look at our neighbours. What we're acquiring, as you can see there, in the bluish colour, and we're surrounded by 3 other uranium projects. It's 10 kilometres from Cameco's Smith Ranch mill. That mill was put in care and maintenance in 2016. It has a capacity of 5.5 million pounds per year, and we literally drive past that mill on the way to our projects. Smith Ranch itself has a resource of over 20 million pounds. They've mined around 20 million pounds out of that area as well. We've got UEC to the north in the Alaman Ross project, and we've got GTI to our south as well. We've got a very substantial position, and we continue to grow it. These formations, the Wasatch, the Fort Union formations where the uranium sit, are extremely well known, been mined for a long period of time. So there's a lot of confidence in what we're doing and what we need to do to advance this asset. And if we continue to advance it, and we're sitting on a permanent project with 25, 30 million pounds of uranium, that's going to be a very attractive asset for other uranium companies. This, as you can see up here, you can see the, actually, to be honest, a small snapshot of the drilling on this Pine Ridge project. The previous vendors, owners of the projects, put themselves around 500 holes into the projects. But what they were very clearly focused on was understanding the district scale of this project. So that looks like infill drilling. I can promise you it's nothing like it. You can see a little bar there. It's, you know, you can see the 3Ks is you know, these guys were doing very wide space drilling, basically mapping roll fronts. And roll fronts are, as Clint explains well, sort of the redox boundary where the uranium is precipitated out. We have found, you know, 160 kilometres of roll front here. There's a huge amount of uranium on this project. We only have an exploration on it today because the previous drilling, they weren't focused on a resource. They were privately held. All they wanted to understand was how much uranium could have been on this property. And they did a pretty good job of finding it. What we're going to do, pretty focused on this already, get out there, start drilling June, July on this project. And we're just going to start trying to hit those nose of the roll fronts, build our pounds very quickly, get an initial resource out to the market by the end of the year, and pretty aggressively put this project through the permitting process in the US. It's obviously an extremely favourable environment at the US for projects like this. Trump is obviously very focused on US first. There was a decree, you know, less than 2 weeks ago saying that critical mineral projects in the US are going to get fast tracked, and critical minerals included uranium. And we're in the backyard, we're in the Powder River Basin. There's no better place to be to advance uranium projects. US continues to be the biggest. You know, I'm sure this was touched on before. The US is still more nuclear reactors than any other country in the world. And today, as we sit here, has very, very little uranium production themselves. And this will be rectified in the next couple of years with projects like this. That's a snapshot of our exploration target. It's a big exploration target. We're very comfortable with it. We think the grades will increase significantly as we start really, you know, hitting the noses of those roll fronts where the mineralisation has essentially become, you know, concentrated more. So we'll definitely get higher grades. The projects around us, same formations, same roll fronts at 600 to 700 ppm. So that's only a function of drilling. We'll increase that as we continue to go, and we'll plan on drilling 125,000 feet on this project this year. That's 40,000 metres. That's a fair bit of drilling. So we're going to be very busy and pretty excited about getting those results out. No one needs to see a picture of me. I'll keep on moving on. This is the execution timeline. We're very comfortable with it. It depends on who you talk to, but this is a doable timeline in this market. We're very comfortable with this. Obviously, getting cracking on drilling this year is the first step in that project, on that progress of that timeline. We'll get out a resource back end of this year on the back of that extensional drill program, get out a scoping study, and then we'll get cracking on baseline, environmental baseline data, which is the first important step to get that regulatory process underway. Wyoming is an agreement state. They can issue a mine permit themselves. We don't think we'll need a mill permit. There's a mill 10 k's down the road. So this is how we're going to progress the asset, and we're excited to get that news out. But Pine Ridge is the asset we just brought, right? And we announced that to the market 2 weeks ago, raised $10 million, happy days to get that transaction away. But before that, we already had a pretty substantial collection of uranium projects in the US. The main one of them being our Tallahassee project, which is in Colorado. It's 30 miles away from Canyon City. Canyon City had the Cotter Mill basically on Main Street for numerous decades. It's a well-known uranium district. Tallahassee is probably the third or fourth biggest undeveloped uranium project in the US. We only have half of that project, and with that half, we have around 52, 53 million pounds of uranium. So, you know, in a functional market, that Tallahassee project should be trading at a bare minimum $1 to $2 a pound, which is just the global average. So even that asset alone should mean we're 2.5 times more value than what we are today. We are in the very final throes of putting out a scoping study on that asset. There has been a huge amount of work done on this project over the years. Cypress Mining got a full-blown mine permit to mine this in the late 70s as an open pit underground. What you can see there is the Hanson deposit, where you can see the most concentrated drilling. There's over 2,000 drill holes, 350,000 metres of drilling on this project. We have nearly all that data. We're pulling together scoping data, which is going to be interesting for the market, so they can have a better grasp of what Tallahassee is and what it could be moving forward. And this is a project we'll continue to advance. It doesn't need more drilling, right? It's all been done for us. We did do a drill program last year, had some sensational results. It's an incredibly thick, high-grade, shallow deposit. And we'll continue to try and consolidate what we have here and push this project forward. These are the exact type of projects the US need to put into production. We have a Maybell asset. This is also in Colorado. We drilled this out again last year, had some very interesting hits. Over 5 million pounds have been pulled out of this project already. You know, very good grades, plus 1,200 ppm. We were seeing that again in some of the drilling we were doing. We have a vast collection of data. Each dot you can see there is an actual drill hole we have the results for. So we've basically done a huge amount of QA/QC on that data to understand what sits here, and we think there's a fair amount of shallow, high-grade mineralisation that exists at Maybell. These guys walk away from these projects pretty quickly when the uranium price drops. It's not because they've been mined out. So we're in the process of putting together initial resource on that, and hopefully we'll get that out to the market relatively shortly as well. We also have a substantial package of projects in the Athabasca. We picked these up around 2 years ago. We're holding an exploration permit at our Newnham Lake projects. We haven't deployed a significant amount of capital into these projects. We've been very disciplined. We allocate capital into essentially our US assets, which we know we can sort of fundamentally de-risk and add value to. But we continue to hold these assets, and we're keen to see how they can deliver value for shareholders moving forward. And then there's Uberian. And sorry, I'm jumping through this so quickly, but there's a lot in this company. We're the largest shareholder in Uberian. It's a chemical enrichment technology. As I said earlier, I'm actually going to present just on Uberian for, I believe, 15 minutes at 3 p.m. It's incredibly fascinating, one, what the enrichment space is, where the enrichment price has gone, and the geopolitics around enrichment today. Uberian has a classified technology in Australia. It continues to progress that technology both from a technical point of view, but it's also in a process at the moment looking to bring on a partner into the business, and we're pretty excited about how that's progressing. So again, GU is the largest shareholder of this technology. It's probably valued in our business today at zero. Silex, and another obviously ASX-listed uranium technology company, has obviously a further advanced technology than what Uberian has, but its market value today is closer to $800 million for their 51% interest in GLE. So these technologies can be valued appropriately, and we'll continue to advance Uberian until the market understands what we're sitting on there. So that's a snapshot of who we are. I won't go through the board too much. We know what we're doing in the US. We've got uranium experience. We've permitted uranium mines in the US before, and we're pretty excited about the Pine Ridge acquisition we just made. We also got a huge amount of news flow coming out on our other assets, huge amount happening in the background on Uberian. So again, sorry to reiterate and make the same point, all those assets, everything we're doing sits in a market cap today of 20 million Aussie dollars, which obviously there's a fair bit of uncertainty in the uranium markets today, but there's a pretty deep value proposition there for new shareholders coming into the story today. Thank you for listening to my story.
Andrew, I don't think you have to apologise for a deep value proposition. That's pretty impressive to us. All right, we have one final company focused on uranium in our carefully curated session prior to lunch. Time to turn our attention to DevEx Resources Limited, one of the select ASX-listed companies who are actively exploring in the Northern Territory in Australia. So DevEx presents a very unique investment opportunity or proposition. So here to dig into their strategic vision and that opportunity, would you please make welcome Todd Ross, who is the Managing Director of DevEx. Welcome, Todd.
Great. Thanks, Christina. Thanks, everyone. And last session before lunch, so I'm glad everyone stuck around. We'll make it worth your while, I promise. So DevEx is, as Christina just pointed out, a unique ASX-listed uranium explorer. We believe with our portfolio of uranium exploration tenements, combined with our growth strategy, our team and our funding capabilities, we have a real opportunity to take advantage of this resurging market, which we've heard a lot about in the discussion in this session. Our usual disclaimer. So a bit about DevEx. So DevEx is, as I said, one of only a handful of uranium explorers on the ASX. We believe that strong uranium market fundamentals put us in a very unique position to take advantage of that resurgence in the market. We are the dominant explorer in the Northern Territory around the Narbarlek region and the Alligator Rivers uranium province, which I'll get into in a minute. We have, by myself and Brendan Bradley and our chairman, have all been involved in the industry for over 30 years each. We continue to be able to build an exploration team, fund the projects that we're actively involved in, and we have an aggressive strategy to grow the business. So a little bit about our team. So we're led by our chairman, Tim Goyder, who many of you may know. Tim's a bit of a legend in the market in Australia. He's been involved in DevEx for over 20 years. He's our major shareholder, and Tim knows what it takes, and that's really making sure that exploration companies are well funded and they have the right people in the business and we have the right ground. We've got all of those elements and we're well placed to create significant shareholder value. 441 million shares on issue. We're well funded at the moment. We've got 9 million in the bank. We've also got investments in a listed company called Lachlan Star. We own about 30% of that company, and also an investment in a private company called Entex, which has an interesting phosphate to uranium technology as well. So myself, Managing Director, joined the company about 6 months or so ago. Former banker, was previously running metals and mining business for BNP Paribas in Australia and in Western Australia. And Brendan Bradley, who's here with us today, is our Technical Director as well. Okay, so we've heard a lot about this, the uranium fundamentals, but just to reiterate the point, if you haven't already got it, there's a massive supply shortfall coming. Over the next 20 years or so, we're expected to see that shortfall supply gap increase by about 200%. And while the current uranium spot price doesn't reflect those market fundamentals, as guys already outlined, there's a lot of reasons behind that and the dislocation between the spot market and the contract market. Just again to reinforce this point, the fact that there's already 32 countries around the world that are operating nuclear reactors, it's a safe, clean technology. There's 438 nuclear reactors operating globally. There's over 60 currently in construction and another 80 in planned development. They're all going to be looking for supply. We've already heard how there's a massive shortfall in the current market, let alone with this scale-up coming. We know that this is a fundamental issue. The utilities are desperately looking to secure supply, and DevEx is well positioned to take advantage of that. By the time we're in production, we think we'll be in a very good place. And it's not just the demand for clean energy, it's clearly the drivers behind data centres and then now the AI revolution, which is certainly going to take a huge amount of power from the grid. We need more and more clean energy, and the market is well and truly poised for that recovery. This time is different. I know there's lots of uranium players out there that have been through many different cycles, but this is a fundamental difference in the market. So a bit about DevEx and our exploration portfolio. We've been assembling a clean energy portfolio for a number of years. Our flagship projects are the Narbarlek project up in the northern end of the McArthur Basin and our Murphy West project in the southern end of the McArthur Basin. I'll get into those now in a bit more detail. What are we looking for? We've heard a bit about the Athabasca Basin. Well, there's only really two unconformity-style systems globally for uranium deposits, and that's the Athabasca Basin in northern Canada and the McArthur Basin in Australia. We're looking for elephants in elephant territory. This is huge systems where we already have over 700 million pounds of mineralisation, uranium deposits either found or mined in this area, and we've got over 16,000 square kilometres of land tenure one of the only explorers, very few explorers operating in this part of the world. And if you look at the scale, these two figures here on the presentation are exactly the same scale. So our Murphy West deposit prospect down to the south of the MacArthur Basin, you can see that if you could overlay that into the Athabasca Basin, we control a very large land package. Athabasca, which we know is very high grade, it's dominated by majors. There's been long production history. It's very, very high grade deposits there, but we now control a very large proportion of the MacArthur Basin. So just getting into the Narbarlek project in a bit more detail. So Narbarlek, we have been operating in this part of the world off and on for over 20 years. We were previously exploring there pre-Fukushima, and we drilled a couple of holes in joint venture with Cameco. Narbarlek is the heart of our Narbarlek prospect. It sits to the northern end of the MacArthur Basin in an area called the Alligator Rivers Uranium Province. And if you look at in the middle of that slide there, is in red is the outline of the mining lease of the Narbarlek historical mine. So that's 24 million pounds at 1.84% uranium mined in the 80s. It was Australia's highest grade uranium deposit ever found and mined. We have the mining lease still. We have infrastructure on site, and our exploration programs over the last couple of years has been focused around the Narbarlek historical mine, but also to the north around the U40 prospect, which I'll get into in a bit more detail. But overall, as I said, the Alligator Rivers Uranium Province has hosted over 730 million pounds of uranium. So we're in the right jurisdiction. We've got 6,000 square kilometres of land tenure in this part of the world. We've just recently announced yesterday a review of all of our data that we've collected over 50 years of exploration in the Northern Territory to really try and answer the question, where could another Jabiluka be sitting in the Alligator Rivers Uranium Province? Just for context, Narbarlek sits to the northeast of the Jabiluka deposit and northeast of the town of Jabiru. So we obviously had the Ranger mine, which was mined out, and Jabiluka still sitting within in the grounds in the Kakadu National Park. We sit outside of the national park in a completely different part of the Northern Territory there, with different traditional owners who we've got very good relationships with. So just drilling down a bit further into the Narbarlek project, where we have been exploring over the last 2 or 3 years has really been chasing up these uranium-bearing fault zones, as I mentioned, around the Narbarlek historical mine to the north and to the south along that fault, and then also up at the U40 prospect. We've had some fantastic intersections in 2023 and then again last year, and some of those previously as well, including over 6 metres at 7% uranium. So incredibly high-grade intersects. What we've now done is come back and had another look at where else could a Jabiluka-style uranium deposit be hiding. The drilling in the past has been focused on where we had those previous intersections. What we've done now is look at getting the right ingredients to try and find where a Jabiluka prospect could be hiding, and that is looking at the structure, faults, and radon anomalies. We've now identified through a very extensive radon survey, which was conducted many years ago, over 2 years, 25,000 samples that were taken of radon, which is the gas that's emitted from the breakdown of the nuclear decay. We've now picked up many anomalies through that process that's sitting on the sandstone in fractures in the faults, which have now areas that have never been drill tested. So we're pretty excited about what that means and what that represents for our exploration tenements up in the Narbarlek region. To give you some context, this is that review that we released yesterday. So where could a Jabiluka scale deposit be found within Narbarlek? Well, we believe, based on these radon anomalies that we've surveyed, that we've now been able to compile all that data, and then adding it to the structural zones that we know within Narbarlek, we've identified several large anomalies which have never been drill tested. Big radon anomaly, which is one of our top priorities there, is these pink bars that you can see in the middle of the screen. That's the radon emissions from that survey that we undertook. Very, very, very large amount of radon anomalies. And then below that, we've got little radon, and then to the west, we've got overload, leatherhead. All have never been drill tested and sitting on structures, on sandstones, with uranium leaking out of the ground. Radon leaking out of the ground, I should say. So these new targets, as I said, if I'll just step back, looking at that same figure, that's the anomalies, and that's the drilling. Drilling's been centred around Narbarlek and around U40, but nothing down near Big Radon. So we're very excited to get out there on the ground, start doing some ground surveys, and ultimately get out there and start exploring this as quickly as possible. So big upside there. As we know with this market, when things turn really quickly. Our market cap at the moment at $40 million, a year ago, $140 million. So the market is ready and poised. Exploration success will create significant value for shareholders. In addition to the work that we've just announced on Narbarlek, we've also got some new tenements to the north of us granted, and this is just south of Deep Yellow's Angularli deposit. So that's the Angularli deposit, is 32 million pounds, 1.9% uranium. So we've got now to the south of that on 2 fault zones and a very large tenement, which we're getting excited to get out there and start looking at and exploring on that one as well. And then just quickly to the southern end of the McArthur Basin, over 10,000 square kilometres of tenure in the Murphy West uranium project. Murphy West sits to the west of Laramide's Westmoreland project, so they recently announced 65 million pounds, or an update to that resource, 65 million pounds. We're sitting to the west of that and have a very large land package now. Earlier stage greenfields exploration. Last year we flew a radiometric survey and magnetic survey across this area and have identified many large radiometric anomalies that we're looking forward to getting out and testing as soon as the wet season's over. Some of the scale of these radiometric anomalies are huge, over 2 kilometres in length. We've got those anomalies now to get out and test. It's just getting our planning together. Systematic exploration, greenfields exploration is part of the world. We're also very proud of our relationships that we have with the traditional owners up in the Northern Territory. They are our workforce. We've been operating there for a very long time. You can see in the middle in the community, that's one of our traditional owners operating on our sites. We've been operating there, as I said, for a long time. We've got a good track record from the environmental perspective as well. We have the mining lease at Narbarlek, and we've been continuing to rehabilitate that historical mine. And we've built up strong relationships with the government there in Northern Territory as well. So exciting times ahead for DevEx, very undervalued at the moment, poised to take advantage of the uptick in the uranium market, but also poised from benefits of exploration activity where we've got a huge land package. We're operating in elephant country, where we've got mineralisation around us. We've seen the discoveries like Jabiluka and Ranger all close by, and we've identified a lot of the signatures now to be able to target those sort of projects. So exciting times to come, and we look forward to keeping everyone up to date on the market as we move forward.
Well done. All right. Feel good?
Yep, thank you.
Good. Right, team, we're going to take a break for lunch. You'll hear the bell ring. That will be your signal to come back in. We're starting off with another one of our fireside chats, and we're looking at clean tech and diving into what that could potentially mean for your investment portfolio and the future of the world. Enjoy your lunch, and I'll speak to you very soon. Thank you.